In the previous video, we just discussed how there's 3 different categories for these chart patterns: bullish, bearish, and neutral. We've created a cheat sheet for you, which you can see over here, and you can also download it below. This is a cheat sheet of all the different chart patterns, which you can print out and refer to as we go through the rest of this lesson. It's a cheat sheet which will make it easy for you if you keep it right next to your trading desk or your computer, so that you can easily recognize these patterns when they do play out. Now, it's very important to understand that when it comes to these chart patterns, they can morph and change. So what may initially start to seem like a pennant could easily morph into a flag, a bull flag or bear flag, and that can start to transition into another pattern. So you need to constantly re-evaluate the patterns that you're looking at and understand the rules of where you go wrong and where these patterns start to become something else. This is all a very normal part of trading, and it's very important to understand that when it comes to these chart patterns, oftentimes a failed breakout, so if a pattern is indicating price should be moving in a certain direction and it does the opposite, can often elicit an even bigger move in the opposite direction, which is why using protective stop losses in your trading when using pattern recognition is so vitally important. Now, let's get into the bullish chart patterns. We've created a separate cheat sheet for you on these bullish chart patterns. If you have a look over here in the legend on the left-hand side, the price will be represented in white over there. The chart pattern is, of course, the blue section. That's what the actual chart pattern looks like. And then the measured move, which is very, very important to focus on, is represented in yellow. Now, some of these look similar, but remember, they can morph and change. It's your job to pay attention to the nuances and the small little differences. I'm just going to go through a couple of examples over here, and then I'll show you some real life charts, ones that I've actually made serious money from on the bullish side, and then later on I'll show you ones that I've saved money on the bearish side. So if we look at this one over here, an ascending triangle, very, very high probability trade setup. Ultimately, price bounces in, creates equal highs, but it's creating higher and higher lows, showing signs of reaccumulation. You're going to take the measured move from the base of that triangle all the way to the very top where the equal highs are, copy and paste that to the breakout point as price starts to leave those equal highs, and a high probability of the time. I use this all the time. I'll show you in the next examples how and why it works out. There it is. It works out. It takes you to the measured move. Another one that I found very, very useful is going to be the continuation bullish pattern, which is going to be a bull flag. Price moves up, then it consolidates, sometimes slightly towards the downside, sometimes it will consolidate exactly equal to the right hand side, and then ultimately you measure the pole section, which is from the bottom to the top of the flag, copy and paste that on the breakout point, and that gives you a measured move of where price should go next. So let's get into the real examples. You'll understand a little bit more when you see the actual candlesticks at play and how it's actually worked out. Let's start off over here with the bull flag. So this is what I meant. Sometimes the bull flag will be slanted towards the downside, and sometimes it will be completely horizontal, like these ones over here. So this was Bitcoin on the 1 hour time frame. These are actual trades that I took in late December, and you can see over here price was around $17,200. Ultimately moved up, started to consolidate over here. That gives you the trading opportunity to start to enter the trade. So you have your horizontal box, that is your support level. You have your resistance level on the top, which is going to be the top of the flag, and therefore you're looking to enter in the bottom of that section. Your stop loss goes just below those prior lows on the daily candle, and that shows you that you're looking at a 5.58% move, so something that you're going to be trading most likely on leverage. And where does your measured move take you over here? There it is. That's the measured move. Price moves up almost to that exact target. Remember, we take some profits along the way, but it almost hits that target, moves into another bull flag, and we take the trade again. This one smashes through the above target, breaking above $20,000. beautiful compounded trade for leverage, and ultimately that is your bull flags. Here's another real life example of Bitcoin creating an ascending triangle on the 8-hour time frame. So if you have a look at this chart over here, you can see the preceding trend was towards the upside, right? Price was moving higher and higher. This is why you know the probability is high that price will break out. It's in line with the trend. So we take the base of the triangle, we copy and paste that level over here. We enter into the next high low, which is also a trend line. You can see price touches into that. Put the stop loss below the prior lows, and ultimately there it is, the breakout point leading to a massive 27.17% move. These are huge moves without having to use any leverage. You would have made more money than the average traditional investor. Another one to have a look at over here, which is a higher time frame chart. Now we'll see if this one's going to play out at a later stage, but it's a cup and handle formation, right? You can see over here, it looks like a cup. There it is. You have the rounded bottom, so price came down quite extensively. Sometimes you have to use a little bit of leeway and discretion, because you can see these candles do break outside of the cup, but it's close enough. This is what I'm talking about, how these chart patterns morph and change. It's close enough to a cup and handle. This also happens to be creating a falling wedge, which if you look at your cheat sheet, is a bullish formation pattern. So that is your handle, right? The falling wedge is also your handle. Price starts to break out over here at 30,560, and we'll see. Go check where price is at now. Did it meet that measured move, which would have been almost a 67% move for Bitcoin? So remember, familiarize yourself with the cheat sheet. And the most important thing to remember is that the preceding trend is very, very important. If the preceding trend is towards the upside, then you know that your chart pattern recognition, being a bullish chart pattern, is more probable and likely to play out. Now, in the next video, we're going to start to go over the bearish pattern. So I'll see you guys all there.